can do it.
But
You can.
Steve, it's got 600 points to go, but from yesterday.
What's that?
It's got 600 points to go still.
Morning, everyone.
Yesterday you sold 300 euros.
Going to get going here.
300 euros.
All right. U.S. markets last night, a little bit lower session. We did rally quite a bit off the lows, more or less into the second half of the day, and you can see there most of the sectors down across the board, except for a couple of the defensives, the telecoms and utilities indexes, which is what you would expect. Obviously we had the bearish non-farm payroll, bearish PMI manufacturing numbers out of China yesterday, which really got things, kicked things off a bit of a negative light. But then, that being said, markets outside of Europe actually held up all right, and even in Europe, that didn't seem to be all that scared. So locally, we traded really well. In the U.S., I thought we performed quite well also. What I think was really interesting is the underperformers were the leaders of the past 6 months to a year, call it. So we had the stocks like you'll see there listed: Netflix, Tesla, Facebook, Twitter, Google, which have really been the big leaders, of the market for the last 6 to 9 months. Really turned down hard yesterday across the board. They're all down in size. I think that's really significant. I'm actually surprised that the market was able to hold up so well, considering the leaders were getting hit so hard. But we'll see. If we get a second day of those things selling off today, I don't think we'll be so lucky. So let's watch how that plays out today. Asian markets down across the board. Nothing significant though. We did have a couple of them that were in the green. I think the Nikkei was in the green a little bit earlier. It's now down about 0.36%. I think even the Hang Seng was down, or was in the green earlier. It's also down about 0.5% now. So we have had a bit of a turnaround to the downside. One of the things that I keep saying to some of the guys is, now that yesterday we had kind of a positive reaction on negative news out of China in terms of the PMI numbers. Everyone expecting them to come to the rescue with some sort of stimulus. I think that every day that goes by now that you don't get an announcement out of China or some sort of extended rumor out of China that there's a stimulus package of sorts coming, I think we'll start to feel a little bit more pressure. China will start to feel a little bit more pressure. I think you'll start to see the market forcing their hand, and very soon, if they don't do anything in the next day or two. All right, no corporate action really to report today. We've got market data. We've got quite a few things out. I think let's just focus on what's important. That's the IFO numbers out of Germany, which have been market moving as of recently. We've also got retail price index and CPI in the UK. And then we've also got PPI numbers in the UK. Later in the States, we've got the house price index, consumer confidence, Richmond Fed, and the new home sales number. So there's really nothing huge that's out there. I think we'll probably focus on some of these German and UK numbers in the middle of the day, if anything. All right, let's get into the maps. Okay, so like we said, for the major underperformers yesterday were the likes of the Netflix. You can see how hard it got hit yesterday. The Google's first real downturn it's had in a long time. The Twitter's really kind of breaking down out of the downside of that pattern. Let's see. The Teslas of the world. So all these things really got hit quite hard yesterday, and you can see that most all of them are in some sort of bull flag formation, and they really all drop support, very similar to kind of what's happened here in this Tesla chart. So I think this is to me, this is quietly concerning, and something that we really need to pay attention to over the next for the rest of the week. If these things aren't able to find some sort of support in the next session or two, this could be concerning for global equity markets, I think. All right, first one here locally we're going to look at is Standard Bank. We'll actually back it up just a little bit to have a look. But bottom line is, you can see here that the 30, this level right here, I think is quite clearly defined and is what we put in a top previously in Standard Bank, and that's at 130.30. So, we closed very close to that. We're only 85 cents away as of yesterday's close. Obviously, we can pop over the top of that level, especially on a closing basis. I think this thing's got legs and got proper legs. So keep that in mind. The banking index here has been one of the best performers as of late. Naspers is the sell one day, buy the next trade that's been kind of on for the last 2 weeks. Only going to continue today. It looks like you can really see here very clearly what our range is, and that's between 1230 and 1150. Incredibly well defined. Today we're probably looking to trade more down toward the 1150 range with 10 cent down about 4% in Hong Kong. That's obviously going to drag on our index a little bit here. But bottom line is we're really range bound here. There is support at 1150. There is resistance at 1230. Remember those levels in the next few sessions, because when we do get above or below on either side of the breakout here, we're probably going to have a quick $80 move on either side. So keep those two levels in mind over the next few sessions. I'll show it actually to you on a 30-minute chart, and you can see it maybe a little bit more clearly. Let me just shorten this up a little bit. You can see there how well defined those two levels are. So that's 1230. That's 1150. Very clearly defined range that we're in here. When we're stopping exactly at 1230, we're pretty much stopping exactly at 1250 or 1150. Sorry. So watch that as we play out the next few sessions. All right, the next one we're going to look at, we're going to go into a 2-year here and look at Bidvest. Bidvest, you can see here, the reason why I wanted to show it in a little bit longer term is just the what this breakout's looking like. And you can see here a potential of a monster target here on really where a breakout of this range that we've been in for quite some time, peak to trough. The target on this thing's probably showing us closer to $300. So I wouldn't be surprised if we did see a move up closer to 300 in the next couple of weeks, provided the market allows it. All right, the next one we're going to look at is Anglo Gold. Anglo Gold, and I actually wanted to look at this one. We'll have a look at it. We'll just shorten it up for here for now. I was going to show it in the U.S., but I think let's leave that. About 186 here. There's definitely some sort of support, but that's minor support. I mean, it's not convincing to me at all. But if you're looking for a level, that is the first level of support. Then after that, it's really looking like it can break down here, which would probably put us to where we really broke out from, somewhere around 164 in Anglo Gold. So yeah, I think if we drop 186, I don't see any reason why we can't quickly move down to 164, provided the rand can hold up with this sell-off that we've seen in the gold price. Nothing would surprise me here, especially the quickness of this move that we saw. Basically an 85% gain out of Anglo Gold. All right. Next one we're going to look at is Tiger Brands. Tiger Brands, you can see here. I should have shown this a couple of days ago. I looked at it and I didn't even show it. We're definitely making a bit of a inverse head and shoulder pattern. I'd probably put that as the neckline there of sorts. It's not the most beautiful setup that you've ever seen, but definitely looking like the neckline there. And you can see here we're starting to push a bit higher. So if we were to give a target from the head down here, let's just call it roughly 240, somewhere between this wick and this candle, up to 265, it could give us a 25 rand higher price target, which would take us up to around 290, and closer toward the 200-day moving average. So let's be conservative. Let's take it from the actual candle here, and let's call it about 285. So yeah, which should put us right at the 200-day moving average. Wouldn't be surprised to see see Tiger Brands get there sometime rather quickly. And the last one we'll show is Sanlam. And now Sanlam, this one may be even more unconventional, but to me it also looking a bit like it's putting in quite a longer term inverse head and shoulder here with maybe the the left shoulder here, the right shoulder kind of still developing a little bit, or I suppose you could call that the right shoulder, and this being the head. But bottom line is, whether or not this is a convincing inverse head and shoulder pattern, this 54 level is huge. You can see how many touches we've had here. I mean, just counting along the lines, it must be, upwards of 15 touches at 54 where we haven't been able to close above. We've failed that 54 level time after time after time. We're less than a rand below that level, and I think that provided we can get up there, obviously we'll probably come up there and test. We need to close above 54. If we close above 54, I think we've got a massively higher target in Sanlam, and I think the earnings are kind of there to support it as well. So keep that one in mind. We could have some legs in Sanlam over the next few sessions. And that's it for today, guys. Thanks a lot.